Welcome to The Tax Factor, the UK's top tax podcast from Blick Rothenberg, the tax, accounting and business advisory firm. This week with Ellie Theohari and Tomm Adams.
Welcome to The Tax Factor, the UK's top tax podcast. No, you're not listening to a repeat of last week's episode. I'm Ellie Theohari and I'm back again for a 2-in-a-row appearance, so eat your heart out, Roger and Neil.
And I'm Tomm Adams, back after a slightly longer gap. I think it was episode 38. So Ellie, what's caught your eye on the tax front this week?
There's been a very strange set of tax stories this week. One that caught my eye was one that you don't see all that often. There was a recent VAT tribunal ruling against a hair transplant company. Not something you need to worry about, Tomm, because you've got a great head of hair. So Advanced Hair Technology, so I'll call them AHT from here, it's a bit of a mouthful, appealed against 3 decisions HMRC made against its services, totalling just under £2.5 million in VAT, so not an insubstantial amount. Going all the way back to 2018, which does actually seem like a life ago now, HMRC decided that the majority of the services provided by this company needed to be standard rated as, instead of being medical, they were actually cosmetic. So HMRC said to them, from 2019, you will need to register for VAT, but that actually was going to be in effect from 2007, so all the way back then. So then from there, HMRC issued a civil penalty to the company for failing to register VAT when they needed to, but the case really centred around whether hair transplants to treat androgenetic alopecia, AGA from here, are exempt supplies of medical care, which the company argued was the case. It was a very interesting read because I'm not particularly familiar with this topic and I don't see many VAT cases in my day-to-day work, but reading what the doctors had to say for AHT and HMRC's expert witnesses, they were going back and forth about the importance and actually the prevalence of AGA. So I now know that up to 96% of men will experience this to some extent over their lifetime. And it was quite funny. The doctors actually pointed to some of the men in the courtroom and said that they were showing signs of AGA, which I'm not sure I personally would have enjoyed, but there you go. So that's what it really came down to, was whether hair transplants are seen as kind of a medical cure. So the tribunal eventually decided that this treatment was not a cure for tax purposes and actually fell into the realm of aesthetics. But they did say, which I thought was very fair, that there should be consideration given in some, specific circumstances. So, for example, if there was a cancer patient, that would more likely fall under medical care and then the VAT could be adjusted accordingly. The company did say they are intending to appeal this decision, so watch this space.
Well, it sounds like it was all getting a bit hairy in the courtroom there, Ellie. Lol. And actually, a fun tax factoid for you. There actually used to be a tax on beards. So back in the 1600s, Peter I of Russia wanted to help westernize or modernize the appearance of Russian society. So if you wanted to keep your facial hair, you had to pay a fine and carry a token to prove that you'd pay the tax. It would have cost Roger Holman an absolute fortune. But back to the present, you and Rehan had spoken a few times last year on a podcast about the new, but definitely not new, side hustle tax, which, for those who don't know, is when you have over £1,000 of annual trading income, tax is payable and a self-assessment tax return is needed. HMRC is looking to increase the threshold for filing a tax return to £3,000 and possibly taking effect from the 2027-28 tax year. And HMRC estimate that would mean 300,000 taxpayers would no longer have to actually file a tax return for this purpose. It's really important, though, to understand that the limit over which tax would be payable would remain at £1,000, but it's just that there would be a new way to notify HMRC of these earnings online and pay the tax bill then and there. So this increase in the threshold should basically help make things easier for people who are trading clothes online or dog walking, cab driving or Instagram influencing, all of whom currently need to complete a tax return.
That will be music to many of our listeners' ears. I also saw that HMRC is launching a dedicated service for both accountants and tax agents to allow them to resolve PAYE and self-assessment queries that have been outstanding with HMRC for more than 4 weeks, which is brilliant. They've said that there will be a dedicated staffer, so that's another bit of great news. But with every high, there is unfortunately a low, and HMRC have been blasted by MPs over what they see as an excessive number of senior staff within HMRC. So at present, they have the highest of any civil service departments, that's 54%, and this comes at a time when productivity levels have continued to decline, particularly since 2022, when the plan was that it was going to get substantially better. And for a bit of context, senior levels mean higher executive officers and senior executive executive officers. Sir Jim Harrer pointed out that the freezing of the thresholds for tax purposes has meant that there are more people coming into the tax system, which means more people to deal with, and therefore more complexity overall in people's tax affairs. But one MP did actually point out that, yes, the freeze and the triple lock on the pensions has meant that there are also a huge number of pensioners coming into the tax system who need help. But actually, although HMRC have pledged 1,600 customer service advisors to their PAYE helplines, there are actually over 1,000 HMRC staff who are dedicated exclusively to wealthy individuals. And their argument was, actually, shouldn't everyone be treated equally? So in a time when taxpayer trust in HMRC is declining, the MPs were very keen that actually everybody is seen on an equal playing field, not those where, in this case, those wealthy individuals have assets over 2 million, annual salaries over 200k. And yes, there is an appreciation that often that means that there will be more complexity and more risk attached to their tax position. But ultimately, any taxpayer should be able to get in touch with HMRC, and there should be the ability for those HMRC staff to resolve that query, or at minimum, be able to pass them along to somebody who does know the answer to whatever question it is that they have.
Yeah, it sounds definitely like it's a bit of good news and a bit of bad news there, and it's quite a familiar story. And I'm sure anybody listening, whether you're a regular taxpayer or poor soul like us who works in tax, you can sympathise with having to wait on hold and often not necessarily even get the answer that you're after. Onto a bit of a tax factor favourite topic, IR35. So IR35 came into effect for the public sector from 2017 and the private sector from 2021. And, you know, this topic's garnered a lot of interest over all these years, but it's interesting that we now have a set of solid statistics and we can see the changes that are working. Now, obviously, you do have to look at any data set with a little bit of scepticism, but if we go on HMRC figures published recently, they show the clampdown in IR35 has raised around 4.2 billion in additional tax, national insurance contributions and apprenticeship levy payments over the course of 4 years. And it also left the average person affected by these rules paying around £10,000 more in tax. So as a result of the 2021 reforms, which were designed to reduce the use of IR35 and force companies to hire contractors on the payroll, fewer personal services companies have been set up, with HMRC estimating that there were 45,000 fewer new PSCs between April 21 and March 22 than what they predicted based on previous trends. The contractors most affected by the changes were those working in the IT, professional and scientific sectors. HMRC's added that up to 1.5 million people may have been working through a PSC at some point between 2015 and 2022. And although the IT sector was the most prolific user, several other sectors were impacted as well. HMRC's recognised that disguised remuneration schemes, so basically arrangements that typically pay loans instead of ordinary income to avoid income tax and NIC, these schemes continue to be an issue, and it's something that they're actively looking into.
As you said, any large data set needs to be looked at with some level of scepticism, as often, data will be used to show what you wanted to show, but it is encouraging to see that level of tax collection as a result of a change that HMRC have brought in. And speaking of changes, as of the 6th of April this year, HMRC will be increasing the actual official rate for beneficial loan arrangements from 2.25 to 3.75 when interest is calculated using the precise method. So for those that don't know what that means, that's where you consider the number of days the loan existed during the tax year and apply daily interest based on the official rate. However, if you're using the averaging method, so you take the total amount of loans outstanding at the start of the year and at the end of the tax year and multiply that by the official average rate of interest, that hasn't been changed. So that's currently still at 2.25. So in terms of which one is more favourable, naturally the averaging method, because if you compare that to the Bank of England base rate of 4.5%, but also the cost of a commercial loan if you were to go for a bank, it is substantially less. This will mainly affect directors. So often as part of a director's remuneration, they will lend themselves money from a business and that will become a benefit for them. So those particular loans do actually need to be paid back within no more than 9 months after the company's accounting period. So for example, if you have a March year end right now, it would need to be paid back by the end of December. Otherwise, the company will incur a tax liability of 33.75% of that loan balance. So it's quite a big amount. The key point is that the increased rate when we're looking at the precise method will be the highest since 2014, which unbelievably that's 11 years ago, but that will represent a really big increase in the amount repayable, where previously it was quite competitive, as I said, compared to the base rate or compared to a commercial loan.
Wow, 11 years ago. I mean, it is crazy how time flies. And that actually nicely leads us on to our final story story of the week of a tax evader who's been under the spotlight since 2009. Christopher Edwards, 72, from Abergavenny in Wales, has been handed a civil recovery order from the Royal Courts of Justice for a whopping £850,000. When he was arrested, he admitted to police, "I've been a silly boy," quote unquote, and was later charged with money laundering and tax evasion. Edwards was first caught when, during a burglary in progress, a van was searched that belonged to him, and it was loaded with illegal cigarettes and alcohol. And in total, the police recovered 40,000 cigarettes, and Edwards admitted to tax evasion and money laundering. Edwards had also been claiming disability allowance since 2008 and had no other official source of income, with no PAYE records or evidence of any tax returns filed since 1991. HMRC began a separate investigation into Edwards in 2017, leading to a search of his vehicle by HMRC officers, and on this occasion, 97,000 cigarettes were found, along with 2 carrier bags filled with yet more cigarettes and £12,500 in cash. In 2018, Edwards transferred £150,000 to Thailand and then fled there in 2019. It wasn't until 2021 that Edwards returned to the UK and shortly after was arrested. He pleaded guilty on 3rd of September 2021 to tax evasion and was given a community order and 6 months rehabilitation.
A silly boy indeed, and that is an unbelievable amount of cigarettes. I didn't even know where you would purchase that many cigarettes. But I think that's all we have time for this week.
The Tax Factor.
If you enjoyed this episode, check out our sister podcast, Brave Business, which recently charted at #1 in the investment podcasts and #2 in the business podcasts. Hosted by journalist and broadcaster Declan Curry, the latest episode dives into the founder's mindset, what it takes to lead, grow, and adapt as a business owner. You can listen on our website or wherever you get your Tax Factor podcast.
We release a new episode of The Tax Factor every Friday on the Blick Rothenberg website and all the usual podcast platforms, so you can listen wherever is most convenient. We record and release them in less than 24 hours, so you always get the very latest news and updates. If you enjoyed the podcast, please subscribe and give us a rating or review.
Next week, for all you Tax Factor trivia fans, it's also the second appearance for both presenters, as John Bull and Mally Keeney present the podcast.
Hopefully you'll be back for number 3 soon, Tom. But until next week, it's goodbye from me.
Have a great weekend. Goodbye.
That's the Tax Factor. If you enjoyed the Tax Factor, please like, share, and subscribe. Join us again next time on the UK's top tax podcast, The Tax Factor. The Tax Factor is a Blick Rothenberg production. Copyright 2025.